Hello, traders. It is Friday, 8:01 Chicago time, on the 9th of October, 2020. This is episode number 1855. Thanks for joining me. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Uh, uh, Not too much to talk about today, but the overall allocation. Um, is risk on today pretty much across the board. Um, there's talk of a stimulus package in play, uh, and so this having backed off what was said on Tuesday, the market's anticipating a turn and a push higher. The market's anticipating a release of some sort of stimulus. And as was mentioned by Fed's Powell and Kashkari, they kind of figured it into their numbers and their decisions at the Fed. So this is something that's likely to happen. The market is basically taking back the selling territory, took back the selling territory from Tuesday, exceeded it yesterday, and we are continuing to climb. We have a gap higher this morning in in most products, and that's where we stand here. Again, risk on with gold leading the pack. Gold higher, up $32.20, 32.20, 1.7%. The Russell's leading the indices at 15 points or 0.92%. The Nasdaq's up 71.75 points, 0.62%. The S&P's up 20 points, and the Dow's up 146 points. The laggard today is the U.S. dollar. It's off by 37 cents again, trading at 93.28. Of course, that's generally going to move opposite of what gold is doing. So that's where we stand. The calendar shows a fair amount coming out of Great Britain in the overnight session, but in terms of what's ahead, there's really nothing left other than wholesale inventories in the U.S. Wholesale inventories are due at 10 for August, month on month, expecting 0.5. The higher this number, the worse it is. We don't want resting inventories. And so that's where we stand today. Very light on the calendar front. The overall picture is that President Trump is returning on the campaign trail already, with the expectation that he would be running a rally tomorrow, Saturday. The A lot of participants are watching that. This election is going to be incredibly volatile, in my opinion. There's a lot that is unusual about it. And so the markets are likely to respond, since the markets do not like uncertainty. This isn't a run-of-the-mill election, and the numbers so far favor um, Vice President Biden over Trump. But the polls last time, people polled are not necessarily people who go out and vote. So in general, the market's really pricing in whatever it perceives. But I think over the next 4 weeks or so, the trade is going to be very, very volatile, especially the night of the election. I'm definitely going to be glued to my seat, watching not only the results, but also watching the markets. So, and definitely watching risk at EdgeClear. That evening, the entire team is going to be here and going to be monitoring how things progress here from the office in downtown Chicago. So that's where we stand here. In terms of what was expected yesterday, this yesterday was an interesting trade. I left you with this. Let me see if I can pull it up. I left you with this. I left you with, hey, no matter what it does, don't don't worry about how do I execute against these levels that I'm talking about, or how do I execute these scenarios, as long as you keep in mind the big picture. And yesterday I left you with a big picture that on the upside we're looking for 42 to 45, and on the downside we're looking for 19 to 20. Um, the 19 to 20, and and essentially how you want to participate in that is really like, how many ways can you skin a cat type of thing. Although I don't really like that particular saying, but um, the expectation yesterday was a drop to 20 and a squeeze to about 45 before the market returns. And what we got yesterday was really tough to trade. Um, let's take a look at that. Actually, this is a PNF. Let me switch to a 4-tick Renko. Not that that improves things all that much. But here it is. It's completely sideways. Let me, because I traded from home, these numbers didn't adjust on my office machine here. 34, 24, 50. So you can see a very clean, clear opening swing. There's the opening swing low. There's the opening swing high, and test, test. And then it started to look like we are likely to sell off. Saw signs. In fact, I posted about it in the Head Trader channel at Convergent Trading, and and then immediately we get this pop higher, right? Uh, Telling me, yo, you're wrong, man. You're wrong. The biggest rotation for the day is to the buy side on a gap up. So now, lock and load long side only trades, and then wait for a setup, and boom, it takes all of that back with a 12-point rotation to the downside. So right there, it just tells me that I've got to lean back and chill for a bit, because given the opening swing, given that it's an open auction, given that it's in a gap zone, it's out of range, given that we didn't make a run, or we didn't respond off the open back into to close the gap at 1675, that I need to be careful with the action. So yesterday really was a scalping day. Um, it did not give opportunities that were obvious to me. And I know that talking about trading and saying obvious is kind of a no-no, but in general, day in, day out, when I come in to trade, I can see what the market has done. I can see what it's trying to do, and what it's likely to do next is obvious to me. So I'm left with the relying on, uh, uh, the variables I need to just execute a trade with reasonable risk, with a good risk reward, right? That's what we boil everything down to. Let me kill these zones. Um, and so I didn't find it reasonable to trade yesterday, to be honest with you. But what it did is this: it did get down into the 20, right? The 20's right here. 20. Oh, I can't draw a straight line in this thing. It did get down to the 20, so the top of this rectangle is 20. That was expected a dip into 20. And then what did I say in the expectations? Consolidate and grind up. And it was doing a good job grinding up towards that 42. Towards that 42, but man, that was really rough holding on to those 42s. And then guess what? As soon as the market closes, as soon as the pit closes, let's kill the stock zones here too. As soon as the pit closes, right here, pit closes, it reopens right there, and boom, it hits the 42, the 45, 42 and 45, and gets to its destination, the expected destination of 45 from yesterday. I'm not here to trade after the pit close, but really, I found this really unusual. Why wait until the the session between the pit and the session end. The session ends in Chicago at 4 p.m., 5 Eastern. The pit closes at 3:15 or 4:15 Eastern. And then we close from 3:15 to 3:30 here in Chicago, and we open for a half hour. And then we settle for the day at 4 o'clock. And this move here happened in a half hour. You could see these two bars, these two 15-minute bars were trend-like bars. And this was what was expected once we tested the 20. So again, open auction, dip to 20, consolidate, and grind to 45. 45 right here. That's what was expected. Here's the image from yesterday's Trader Bite. Open auction, grind down to 20, and then turn up, grind to 45. And it did it after the fact. Not enjoyable at all. So what has it done since then? Since then, it's traded 200,000 contracts um, in line with what we would expect for the overnight session at this point in terms of volume. The overnight session was completely balanced in this kind of um, strange formation. It's really a kind almost a triple distribution, but we can see that most of the volume went off here at 34.51. 34.50 is a mid-century figure. So we're going to show that some respect, but we're seeing some of the hallmarks of yesterday's trading. These strong pops higher that end up taking themselves back, and then strong drops lower that take themselves back too. We saw this in yesterday's action. You know, we would push higher and immediately pull back, consolidate, drop, and then immediately go back, it just flushing people out. I don't have I don't have an explanation for that in terms of how the auction's proceeding, but it seems to me, based on the order flow and how these things are being created, it seems to me like a lot of positioning is taking place. So, you know, one of these spikes we saw this morning right here, just a complete stop run, pretty big volume on that right here. 597 contracts swept up right there, and it comes right back in line. So we see these throughout the session, and it's kind of an anomaly that I cannot explain. Here it is again. We get good volume hitting. Those are collisions. Boom, boom, boom. And then the market bounces back, and you have a collision back up. A buy collision versus a sell collision. Here you have a buy collision pushing and then coming all the way back. To me, normally this buy collision would run, pull back to that collision zone, consolidate, and continue in what is an impulse. So the impulse continuation trade is not a trade in this current market regime or environment, and it's costly because that's one of the key setups I look for. The market makes an outsized rotation, pulls back, consolidates. I'm looking for failure to sell against this up impulse, get in with a tight stop, and look for a scale out at the prior high, look for continuation to the next area up. That trade does not work. It does not, it just does not pay in its current environment. It's almost like we expect continuation after breaks, and those continuations are not happening. So it just means it's showing a lot of opposing directionally opposing stop runs all the time. Let's take a look at what has happened in the overnight, and while we're on the screen, look at the order flow. I'm not seeing much in terms of stable order flow until about 63, and then below us at 34.40. 34.40 to me makes sense. It's right up against the 38.75 high from yesterday, and in that 42 to 45 area. But other than that, not seeing any clues or cues in the order flow overnight. Okay, the overall the overall delta, the overall delta just came back to break even pretty much for the current session. It's at plus 600, plus 588, and overall it's just sitting sideways. What we're seeing though is that the market is pushing back against or near highs, pushing back against or near highs. This is the overnight high over here, and there's relatively okay activity. I expect a little bit of volatility today, but overall, I'm expecting it to be a pretty boring Friday unless news comes out or talking heads um, come out and say something that could throw the whole thing off. One quick thing, I know I'm getting long in the tooth here. One quick thing I wanted to show you just for a big picture. This is a market profile chart. It's a funky looking chart, I know, because I'm not showing the profile itself. I'm just showing the letters. The blue zones that you see here, this is the value area. And then the maroon is the point of control that is based on time, market not volume profile. And what we see, what I get to see here is through time how value is migrating. Okay, so you can see value is just continuing to be accepted higher. Pretty tight value yesterday. This is RTH only. Uh, pretty pretty tight value yesterday. A lot of consolidation, and now we're higher. So based on this, I'm only looking long. But look at where we are in the big picture. Excuse me one second. Look at where we are in the big picture. What we've done is we've come back, and this is where that 42 to 45 comes in. It's this, okay? It's this value area, this value area that we broke through. So I was looking for it to start testing these areas up here, the low of this day, the high of these days, and so on and so forth, okay? Um, and then as we pushed through this area, the 3420, and we started to climb, I'm looking for the point of control of this day, and I'm looking for it to start playing out. And I'm going to pull this profile forward. And by the way, look at where the September high is. It is well within range here. This is the all-time high. We're not that far from it. We have done a good job migrating value down, consolidate, make an attempt. Remember, this is the 1314, 3420, and then we drop down, and now we're coming back. Value is coming back, and it's squeezing higher. And as you can see here, value was very wide in this area, which means that it's very likely to run through it quite a bit. So to me, we're not that far. We're really not that far um, from getting to the all-time high. And currently, the next big area up is 3482. That is the most accepted area above here, and then 3500, and then from there, it's pretty much all-time highs. So just looking at how value is migrating is an important thing. The other thing I wanted to show you is the migration of price. Here's the migration of price. You're familiar with this chart. We have squeezed through the 62%, 61.8% pullback from the all-time high of 35.7675. If your all-time high is different than this price, this is RTH only, then your data is not properly back adjusted. You'll want to go get that done. But we're pushing away. Here's the week, and we are establishing one-time framing up on the week. This is a positive trend despite what the delta is doing, which, we can see the delta is weak back here. We are still pushing price higher, and we're likely to migrate up to that 34.94 area volume wise, right? Not market profile wise, volume wise. That is the next big area to test, which is about the 78% pullback. So To me, this is really breaking out of a really important area right down here and is starting to move higher. And so the shorts are likely to get squeezed here. So let's take a look at what's expected for today, as I'm running out of time here. So what are we looking for today? It is Friday, so remember to keep your expectations tempered. Today, I'm looking for an immediate break to the upside. I'm looking for 34.60 to get squeezed. I'm looking for a push into this 68 area. I'm looking for there's a fair amount of confluence here at the 68. I'm looking for it to fail to squeeze through. I'm looking for it to come back to the open where you would still have this gap zone. Looking for it to come back to the open, drop back in, and then hold sideways into the weekend, giving us a higher high, higher low, a migration of value higher. I'm expecting value to just move up, okay, the point of control to move up. So overall, this would continue to be a slow chugging along of the buyers, which is what usually happens in these rallies. 68 is the key test area above, and below us, I'm looking for to push back to 51 to 51. These are the two big areas that it's likely to test. If it breaks through the 68, then it's making then it's probably it's likely going to make its way up to the 82 area, and so on and so forth. Secondary, not expecting anything huge today, okay? Because it's already done its move in the overnight section. We're opening in a gap. Secondary, it pushes on the open, it pushes immediately higher, and then we get the squeeze down, comes back, consolidates at the 51 area, and then it becomes responsive and retests yesterday's point of control and value at 34, 33, 34, and then holds steady. We still end up with a higher high, higher low with a higher point of control, but this is checking. We're moving from gap to gap here. This is checking that structure before we can confidently continue to push higher in on Monday. In either case, again, just like I said at the beginning, temper your expectations for today. I'm not expecting a huge breakout trend or anything like that. We have run a fair amount. We have not spent enough time consolidating and forming a micro composite that would give us the energy, in my opinion, to give us another run without a news-based event. Okay, do you understand the logic? Hopefully you understand the logic behind what I'm expecting for today. So I'm looking for the overall action to be fairly muted, and I'm expecting the push that occurred between 3:30 and 4 Central yesterday to be tested at some point. If we fail to hold the 51, we're very likely to push down into that 38 and then 34, 35 area. Okay. Good luck today, and I'll catch you on Monday morning. Take care.